Hello, and welcome to one of my favorite episodes of the Penny Lane podcast. This week we have Ben, aka Pattern Profits on Twitter, join us to go over his incredible story, some of his favorite tips, and man, did I have fun on this episode. As I was recording it, I was like, this is just pure gold. I can't wait to go back and take notes and re-listen. And I hope you guys all find it as helpful as I did. Ben is such a great guy. He's such a fun hang. Follow him on Twitter. He is a wealth of knowledge, and he hints to us that he might be taking on a very big challenge soon, and I hope we can all get together and support him. Ben, hi. Welcome to the Penny Lane podcast.
Hi, Blaine. Hi, Justin. Thank you for having me.
Oh, we're thrilled.
Fantastic. Looking forward to this.
I just received a text from Blaine, I don't know, 30 minutes back. It said, "This is a big deal." As in you, Ben.
Whoa.
I think that's
Is
true.
that so?
I think it is a big deal. I've been so impressed with you for so long on Twitter, and you're always so nice to answer my questions, and I'm a big fan.
Oh, well, I thank you for that. And just trying to pay back. We all start somewhere. And I was once, the one on the other side of that, asking all those questions. So I'm more than happy, to help new traders out and progress them along the path a little quicker.
I'm fairly sure that I asked you a question one time, which I might ask you again about inside days, but I asked you a question on Twitter and somebody wrote like, "Oh my God, you have the patience of Job to go through this with her." And I was like,
What a Bible ref, Job.
I know.
That's incredible.
It is one of my favorite setups, so I do end up discussing it quite often and sharing those details quite often. So my regulars that have been with me for quite a while, I think we're going on 14 years now, they're pretty much familiar with the inside day and what it means and what it entails.
So I have a confession. Before this interview, I really try to put in some effort into re-understanding what an inside day is, and I failed. I'm gonna have to ask you again.
Okay, no problem. So an inside day, it's a consolidation. It means that the high today did not take out the prior day's high, and the low today did not take out the prior day's low. So the entire range of price today is inside of yesterday. We didn't go above and we didn't go below.
Okay, clarifying question. So
Sure.
earlier this summer, we were playing T+2 setups. Is the difference between a T+2 and an inside day that the T+2 has to run 100%?
So when I break it down to inside day, I'm actually narrowing that down to an even shorter time frame, which is the 30-minute time frame. I know that if on the daily, on the 30-minute chart, that is going to be a triangle. Just the fact that it's inside, it's going to create a symmetrical triangle.
Okay.
Because we have the high, we didn't take it out. So we've got lower highs. And because we didn't take out the low, we have higher lows. That forms the triangle. So my concern is only when it comes out of that triangle, which direction. Like, I'm not really concerned with where did it close within that triangle, the bottom of the range, the top of the range, is it right in the middle? I'm more concerned about when it comes out. Now, when it comes out of that triangle, that gives me an early entry on that 30-minute chart if I'm day trading. When it comes above the high of the prior session, that's when I know it's come out on the daily chart, and that's usually when I'm going to add. So it's zooming in, even though I'm finding them and scanning for them on the daily chart. Once I found them and it's in a name that I'm interested in, I'm zooming in, and that might be usually it's the 30-minute chart.
you are talking about the entire price range, right? Wick included. You're not talking about open and closed price points only, right? It's just if it's within 30 minutes, it's not where it opened at the beginning 30 and where it closed at the end. It's just the entire price range.
That's correct. It's the entire
Okay.
price range for that day is inside the prior day.
Got
Okay.
it.
But then when I
Yep.
zoom into that 30, then I can really see the details because I know if it was inside on the day, it's definitely a triangle on the 30-minute. Now I just got to draw some trend lines and really, narrow that down to where that triangle is and where it's going to break out. Where is that breakout going to come? And that's when then you want to see the volume come in and more details. But you're really trying to zoom in. Now, I have a lot of followers. We've done this for many years. They don't zoom in at all. They're just looking at the daily chart. And once we take out the high of the inside day, they're coming in. Then we take out the high of the day before, they're adding to it. So it all depends on your time frame and what you're comfortable with.
Well, no wonder you developed such a following. Two reasons. That sounds like a fantastic strategy. Second, the way you explained that was very succinct and understandable.
Ooh, good word. Succinct.
I like that. Yes, I like to hear that. And especially for newer traders, sometimes we tend to go through it so fast or use these terms that they're not familiar with. I do try to keep it with the basics so that everybody can understand and follow along. And then I want to share this too because a lot of people see me share these inside days, and it's this long list. And or some days like yesterday, we didn't have any because that's what the market gave us, but I've already narrowed down kind of my universe of where my inside days are coming from. In other words, I'm not scanning 7,500 stocks or the whole market to find my inside days. Usually I have a list of anywhere from 30 to 70 names that I'm scanning regularly. So I'm very familiar with those stocks. I'm very familiar with the fundamentals, how they trade, what they do, what the earnings look like, what the revenues look like. So it's not just a random, inside days. There's a good chance too that I've traded it before, that we got in, we traded that inside day, and now we're coming back to it because it's set up again.
So I've noticed that you really like the stock Love.
I really do. Maybe a little too much right now. It had a good day today too. It had a good day yesterday, even when the market was deep in the red. I do. I like that stock. I like the product too.
Mm-hmm.
It's new. I always look for something that is new and something that maybe changes the way we work, live, or play. That goes way back to when I started and first learned can slim strategies. But I think Love has some of those things, and it's gaining traction. It's gaining in popularity. I tend to go and read the reviews every once in a while, to see what people are saying about the product and the ease of cleaning it in use. And when I can match that up with a great chart, yeah, I like to get involved.
So, do you have a Love sack?
I do not have a love sack. I, we thought about getting one for the kids, and I still may do that, but, but, but no. As of right now, I do not have a love sack. No.
Justin and I are big believers in pumping our own stocks. Like we like to. We were on a kick recently for Krispy Kreme for
Okay.
DNUT, and we were trying to really get a lot of donuts. Just do our part.
I understand.
Right.
Do you have a love sack? Do either of you have a love sack?
No, but I feel like I could put one in that corner because my kids come in here all the time.
You're right.
Yep.
Absolutely.
Yeah, just so everybody understands what Blaine is saying, it's not that we're pumping the stock, it's that we're pumping the business. We are trying to get, yes. Yeah.
I mean, I get that's fringy.
No.
I meant we're customers.
Right. I had a chance a long time ago to be a part of a large conference where Warren Buffett was the speaker. And he said during that conference, if you ever see a can of Coke, do me a favor and pour it out. As in, so someone will go buy another one, or so people will continue to consume it. Because he, at the time, I don't know what he currently is. At that time, he was a very large shareholder in Coca-Cola. So I thought that was always kind of funny. That's not pumping the stock or whatever. It's just if you see a can of Coke, pour it out. What's a can of Coke going to do to the stock price, or one love sack, or one hot and fresh donut, right? So we're certainly way off topic, but I just wanted everybody to know Blaine was not saying that go buy love the stock. So,
or maybe do buy love the stock. It looks pretty good.
Well,
I looked at the chart before this interview.
Trade your own plan. So
yeah, well, that was such a disclaimer. I wasn't saying we're pumping the stock. It was I
wanted to put it out there. So, well, I don't know where you want to go with this, Blaine, but Ben, how did you come across this particular stock? Was this just you scanning?
Okay, I'm a big fan of what I call power earnings gaps. And what typically happens with a power earnings gap is the stock will 300, 400, 500% above average volume. Okay, and it's going to be up double digits on that particular day. To me, that means the big institutions are caught off guard by these numbers. It was something they didn't expect when it was released. So what happens is they've got to fight over each other and pile in to grab those shares. And we tend to see that in the price and volume action. So that's where I first came across love this go around. Now, I had been familiar with it in the prior run, but this go around had a power earnings gap. And when it started to really move up and that volume was coming in, that's another scan that I do pretty much every earnings season, every evening during earnings season, to find those names that are showing really, really big volume on a big price gain. And those get my attention. And then what I watch is for them to kind of consolidate. I don't like to jump in right away when we've seen that big day, because you definitely can get hurt that way, especially in the market we've had recently. So I'll wait for it to consolidate, form a pattern, go sideways, form a flag. Maybe it forms a triangle, similar to what we were talking about with inside days. Just now we're talking on a daily or weekly, pattern. And then we break out of there, and that's when I'm looking to come in. So power earnings gaps, so that's what puts it on my radar.
I love that. It seems to me, I'm trying to learn this myself, so I'm seeing it in you, but your trading strategy seems to be very much like, if this, then that. Like, if this happens, then I do this. And I love a system like that, because it takes all the humanity basically out of it. Is that true?
It's not only true, but I have a love-hate relationship with that fact on Twitter, because when I share an inside day, or if I share a group of inside days or power earnings gap, one of the things we're used to seeing on Twitter is, oh, look, that was up 30%, told you so. Well, I'm actually doing the opposite. I'm coming in and saying, here's an inside day. Keep your eye on this, because if it breaks out, it has potential to really move. That's typically the opposite of what we tend to see on Twitter. So I'm basically setting myself up for failure there if that doesn't happen. So I kind of put myself out there a little bit and say, here's the inside day. It looks good. This is a strong company that I'm aware of. And if that inside day comes out to the upside, we're going to be in good shape. So
now,
yeah, I'm kind of in front of it.
Well, first of all, what an amazing service for your followers. I know I struggle with preparing a watch list. I'm going through the scanners. But there's so many stocks. I can't go through all of them. So even to narrow it down for me to look at it for my own decision or plan, that seems like an incredible thing that you just give people for free. So thank
Yes,
you.
you're welcome. It's my pleasure. And I usually do it right after the close, and every once in a while, maybe 10 minutes or 15 minutes before the close, I'll look at a few that have closed high in the range and that look really good for the next day. And I'll try to get those out before the close just so, my followers have them on their radar.
So I think what you just described, kind of the if this then that, or the if then statement that Ben talked about, or that Blaine talked about. Ben, is that like in your mind a pattern?
It's absolutely a pattern because we are trying to anticipate the breakout of that pattern. Even if you go back to cup with handle, triangles, flags, when we see these things where those patterns are actually giving us the psychology of the participants involved. And if we can kind of make that into something that's actionable, and we can see that developing before that happens, we're going to be in good shape if we took a position as it comes out. If it takes off, we came in. That's where the if then, comes in. And we're not going to point to it later and say, look at what we found. Once it's already up 10 or 15, 20, 30%, we're going to go find the next one. We're already pointing, to the next pattern.
So usually then these patterns are subsequently profitable.
They're supposed to be when they happen, though. If you have the patience to wait for the confirmation of the pattern or the breakout, yes. When we get in trouble is when we try to get early, and the triangle's still kind of forming. And then we have a day like we had yesterday where everything gets hit and they don't confirm to the upside. Instead, they confirm to the downside. And if you tried to come in early, yes, a lot of times, that's when you can take a hit. But what ends up happening, they usually set up again, because I'm trying to tie that in with strong stocks that have good, solid fundamentals. And like we talked about, it's a new product or service. So like I said, it's not just an inside day, because if I listed all the inside day, we may have 600 of them, through the market. I'm narrowing that down to maybe a couple dozen at the most.
So I think in sum, we now understand where Ben's name comes from, Pattern Profits.
I saw what you're doing there, Justin.
But I wanted everybody to now understand the thought process that went into that. It wasn't just an off the cuff statement, right? Pattern Profits. So there you have it.
That's exactly right.
Yeah.
He gets
Blaine,
it.
Blaine, I know you didn't want to just talk about how Ben came up with his handle, but I thought, you know what? It's right there.
It's right there. Might as well. Well, I got so excited about talking to you about charts and stuff that we skipped over the part of the interview where we asked you about how you got into trading.
Mm-hmm. Sure did.
Sure, no problem. So in the late 90s, and I think most people my age that were trading in the late 90s, that's where we got involved. The market was super hot. All you had to do was buy anything with .com in the name, and we were, every day it was going up 10, 20%. Fantastic, fantastic times. And that's when I got involved. It was actually my college roommate. I wasn't a trader my whole life. I actually went to college for physical therapy. And while I was in school, my roommate, he was making money every day and just having a blast doing it. And he's the one that got me involved. And then 2000 came along and the market went the other direction. And we gave quite a bit of the money that we had made back because we found out it wasn't us. We weren't brilliant. It was a market that just went up every day. And that's when I said, okay, I got to take this a little bit more seriously, look into it. And I read How to Make Money in Stocks by William O'Neill. And I was hooked after that. Once I read that book, started to understand the concepts, apply the concepts. The rest is history from there. I just kept adding on to that's kind of the building blocks right there and the base of my learning. And still to this day, everything I do outside of that kind of builds off of that foundation.
Okay, and then when did you get on StockTwits originally?
So I got on Twitter originally and StockTwits, and just found that it was too much to try to manage both, because especially when I first started, I was really active, and I noticed that most of my interaction turned out to be on Twitter. So that's where I've been. I believe it's 2008 now when I got on Twitter, and have been there since. And that interaction there has grown and grown and grown until almost a full-time job there now. But I absolutely love it. I wouldn't have it any other way.
Okay, and tell me about your blog.
So on the blog, you know how I was saying earlier, I narrow those scans down into a smaller universe. Well, that universe is what I share on the blog. And I share that usually on Saturday morning. I go through my scans, I find what I call my focus list. And that's usually the top 30 names. Now, that list is going to be anywhere between 60 and 90 names, but it's the top 30 that I'm really focused on. That list is the top groups from IBD. They're showing relative strength. They're showing earnings growth. They're showing revenue growth. All those can slim type things that we look for. That's what we have within that list. So that's kind of my focus list, and where when I run my scans during the week, it's going to come from that list and then the power earnings gap list that I mentioned. When I day trade, going beyond the inside outside days we talked about, I also do what's called a velocity scan, and I share that as well. And what that velocity scan is, those are stocks that, kind of like we talked about with the power earnings gap, but this is a stock that has a low float, meaning it's under 100 million, and it's doing 30% more than average volume on that particular day, and the stock is up 3% or more. So that's telling me something's going on here. There's an interest here. The institutions are coming in, the smart money's coming in. I need to look into it. I need to pay attention, to what's going on here. So I tend to share those every evening on Twitter for that day, and then I share those on the blog as well.
Does teaching people and making watch lists for people make you a better trader?
It absolutely does, because it keeps me very narrow focused. Because especially on Twitter, it's so easy to get FOMO and see, oh, so and so's trading this, and oh, everybody's watching this. And for me, I'm able to really narrow that down and focus. So I know this is my little world. This is my little universe, and I don't stray from it.
I would see how that could be very, very true. You just narrowed and focused, and then especially there are people who count on you, and that has to help in the whole situation as well, of just, I've got to do it for me, and you've built a community.
I have, and within this community, from talking to so many traders, the biggest hurdle for them to get from whether it's full-time or part-time job to full-time trader is being able to do the research. The majority of traders that I talk to, family and their job, they don't have time to see which stocks are leading the way, how's the market overall acting, what do the internals look like. So I have to do it for myself anyway. I might as well share it. And that's always been my approach since I started this, was if I'm going to do it, I'm going to go ahead and put it out there and share it. You guys take advantage and use it in your own manner. I don't encourage the piggybacking, of the trades, but everyone really, from the ones I've talked to, do a great job of making it their own. And that's what I'm aiming for.
Do you know? So for you, Are you going long? Is that really your strategy? Are you buying shares?
So yes, I'm going long common stock.
Okay, got it.
That's 95% of what I do.
Got it. Thank you for clarifying that. So I bet not everybody who is kind of using your information probably has kind of the same tactical strategy, right? I bet there's a lot of options traders. I bet there's a lot of swing traders. They may not be looking. I'm sorry. There's probably a lot of day traders, not swing traders, looking at kind of those where the days are closing, if they're inside days or not, right? But I think there's a lot of people that probably still find that value out of what you're showing. I mean, even just a starting place by those scanners is monumentally helpful, right?
You're absolutely correct. I went from day traders, option traders, common traders, going back to position traders who are finding stocks and getting an entry, and then they're staying with those stocks for 3 months, 6 months, 9 months. Once they build what we call cushion, we're always looking for cushion. We want to have 10%, 20%, 30% gain into earnings so that we can hold and not have to worry about, oh, they missed their earnings number or the revenue number, or they didn't have as many daily average users or monthly average users, and that stock's going to hit. So we're always looking for cushion. If we have that cushion and every time frame in between, I found that, wow, there really is value for a wide range of different traders from what I'm sharing. And that goes right back to making it their own.
So, can we just talk a little bit? Well, actually, I wanted to ask a different question. Do you live trade at all during the
So
day?
most people are going to be very surprised to hear this, but I'm on Collective too, and I've been there since 2018. That is the live trading that I do for position traders. And this year, we transitioned that to more of a swing account. Whereas the last couple of years, we were position trading. So it wasn't like we were active every single day. But we did position trade. And this year, because the market kind of forced our hand this year, it was not a great year to be a position trader, buy and hold for 3, 6, 9 months. Those
Mm-hmm.
stocks were making progress. You were getting 10%, 12% gains, and then they were giving it all back. So, yes, I am on Collective 2. I've been on Collective 2. There's a history, there and a trading history there. And I do not really go out and promote that. But those who have asked me and those who want access to that, it's public and they have access to it. And again, I don't charge a penny.
We were having a conversation the other day, and there's been a few folks who try to stay away from Twitter or Discord where possible because when they're in a position of educating, there's a lot of noise where people just want the quick and dirty. Take this, don't take that, get out now, get in now. And what happens in that case with you? Is that not something based on your kind of concentrated following that's not really a thing, or do you constantly see that? Are you pestered by that, and what do you do in response to it?
I avoid that. That particular setup of being in the Discord chat rooms where there is a lot of ideas being thrown out left and right. It's one of the reasons that there was it's not even a possibility for me to try to take on or manage something like that. But this works for me because it's linked to my account. I enter the trade, it goes through, all the followers see it, and there's no real, they can make their decision at that point. There's not really discussion at it. It's, oh, this is what he's doing, let me take a look, that type of thing. It is, and not that I have anything against the chat rooms. I'm a fan of quite a few of them. Ticker Monkey is one. I don't know if you're familiar with those guys, but JT does a fantastic job over there. It's one of the rooms that I'm very comfortable in. I'm actually a member over there, and the flow over there isn't as wild as some of the ones that I've been in, where just throwing out tickers and your head spinning with FOMO because there's so many ideas coming at you at once. So my approach instead was to share those scans and the work that I'm doing after the market closes, share it on the weekends, and that way I can just be focused on doing what I do during the day, and that approach has worked for me.
How long did it take you to get to be consistently profitable in your trading?
6 years.
Wow.
Do you follow singles and doubles?
So I'm familiar
On
with singles and doubles. I
he's
know just through
we've had
you.
yeah, we've had him on the podcast twice, and it took him 7 years, and he is incredible.
It's I would say this, it's always a work in progress. Probably one of the worst things that can happen is to have great success immediately, because you usually learn that lesson the hard way and the expensive way, shortly after. But the other thing is, in the beginning, you don't really know who you are as a trader. You don't know if you're better off looking at 5-minute, 30-minute charts, or are you better off looking at the weekly and the monthly charts. You really have to figure out your own personality and who you are, and that really only comes with time. And now I'm one of the few traders out there. I trade all 3 time frames, and when I say all 3, I'm talking about day trading. I swing trade, where I'm taking a position, holding for a few days, and I position trade. And that's something that just developed over time. To be honest, I don't enjoy the day trading nearly as much as I love doing the position trading and getting in something for 3 or 4 or 5 days, and that working and building cushion and then turning that in to a 3-month, 6-month, 9-month hold because the market's healthy and I'm making progress.
Why
That's the
why
approach I really like.
why do you like that more? And here's why I'm asking. It's a loaded question. So Blaine and I very much like day trading. I don't have time to day trade as much, so I don't do it. But if I did, I would prefer to. I think Blaine does as well, because there is, a certain kind of rush and addictive personality that comes into play with day trading, for better or for worse, mostly for worse, right? So you mentioned that you prefer the opposite, or not really the opposite, but more of a long-term trader, right? And so what's the thought process there? What's your why?
When I first started, that's where I started, and that's kind of where I found my footing, and still to this day, that's my comfort zone. Now, I love being able to go to bed at night all cash too, and not have to worry, what the futures are doing and how we're going to wake up to open to red in the morning. But at the same time, when I have cushion in a name and I'm confident in it, I'll give you an example: Peloton. Last year I started accumulating Peloton. I got the bike. I may not own Lovesac, but I do own a Peloton. and I started. I said, "Wow, this is fantastic. I enjoy it." I watched those instructors turn into celebrities, practically overnight. I saw it catch on. I was extremely confident in the product, in the chart when I looked at it, and in my position. That's what I enjoy, is getting in a name like that early and then watching it just climb that ladder up. And ideally, and the studies show, most of those growth stocks, you got to get through 4 to 6 earnings reports. So you've got to
Wow.
get through a year to a year and a half, to really make the triple digit gains. And that's what I really like to do. But at the same time, the market has to cooperate. 2020, the market was cooperating to get into a stock early and hold that, through the 6-9 month hold period. It kind of changed this year. If you were trying to go for those, big gains, it wasn't nearly as easy as it was, over the last few years. So the way I tell new traders that really like that approach, take that approach at the beginning of a bull market. When you've come out of a deep correction or a bear market, that's the best time to latch on to one of those big winners and try to hold on to it for a much bigger gain.
Justin is deeply invested in the stock Nokia. How many earnings have you helped through, Justin?
2, so not nearly enough.
Justin
when I
bought
refer
Nokia.
these sometimes are like young growth names too that I'm referring to. Is like you've got to get like Nokia's. It's been around a while. This isn't a new name. So
it's a turnaround story for 5G. Thank you very much.
There you go. I like the way you're thinking. I love the way you're thinking.
We can readdress the way a stock is described, right? If I can spin that into a different story other than what it really is. So that's what we've done. I have a question though, and this is a dumb question. I'm going to ask it anyway. It's too bad. You just mentioned, depending on the year, right? You're certainly not going to hold 4 to 6 earnings periods, right? You just talked about the 2020 versus 2021. You use scanners all day, every day to figure out kind of where you're going next. When you're talking about pivoting your strategy, are you getting that information from overall market sentiment, or are you saying that, hey, these are the scanners I've been watching, these are the trades I've been entering, and they're not working, so ipso facto, I got to go ahead and adjust what my strategy is? Or again, is it more a macro idea that you've kind of come up with, and then so you've decided to change or maybe pivot? Does that make sense?
Yeah, and progress. That's probably it's a little bit of both as you described, but the number one thing is progress. Am I making progress? Are my day trades turning into swing trades because the market is so healthy that I went from up 4% to up 8% because I held it an extra day? And then going back to that swing trade, did my 10% swing trade turn into a 20% gain because I held it for a week? So a lot of times it's always about progress. On the other hand, if my swing trade was up 10% and I took a little bit, trimmed a little bit, and 2 days later I got out of it flat because it turned back around on me, the market's telling me this is not a good environment for swing trading. This is not a good environment for position trading. On the last year, if I took a swing trade and I was up 10%, I felt like an idiot because 3 days later it was up 30%, and I took my swing. That's the difference between 2020 and 2021. If you don't take your profits this year while you have them, there's a good chance a couple days later you're not going to have them anymore. Whereas it was the exact opposite last year. They just kept grinding higher. And so that feedback, that's a huge part. And then I do always look at the market internals. Like on a daily basis, I'm looking at those internals to help guide me on the big picture.
Got it. Fair enough. So I need to change topics for a second, if you don't mind, Blaine. I need to ask Ben this. This is a very important question. And it's a little loaded because it's not necessarily ageist, because Ben's not very old. However, Ben's been trading for a lot longer than a lot of people, I think, kind of full time, or really been in the markets. I mean, again, late 90s, early 2000s, .com bubble. I don't think that there's I think the vast majority of retail traders who are on FinTwit probably can't say that they were trading during the .com bubble. I say all of that for one particular reason. You certainly have a great understanding of the cost, risk analysis on entering trades. So with that in mind, what is your opinion of trading cryptos?
If I didn't have kids and need to sleep at night and they didn't trade around the clock 24 hours, I'd probably be involved. But the fact that I have 2 young kids and I'm one of those personalities that I won't sleep if I'm in something, and I did. I gave it a shot, Bitcoin initially when it was out. And, if something's hot and everybody's talking about it, NFTs currently, it's going to get my attention. And I'm going to find a way, if I can, to get involved. And I'll tell you, going back, it was futures. And I said, "Oh, futures, what's this? I want to trade with leverage." And I found myself getting 3 hours of sleep over 3 nights. And I said, this isn't going to work. That's the same thing with crypto. It's just doesn't work for me and my, lifestyle outside of trading. But God bless you guys who are involved, because some wild action there, that's for sure. Never at a loss for action.
No, there's not. But it is, to your point, it's crazy. I played golf with a guy recently who was trading Ethereum or something, and he had his phone in the golf cart. And every 2.5 minutes or 5 minutes, he had his phone set to a price alert, and it would yell out loud, Ethereum is now at X, Y, and Z. And it was every couple minutes just screaming out price alerts to him. And this is a Saturday afternoon, and that's how he's living his life.
Yeah, that's not going to go over too well with the wife in my life. That I get it. Believe me, I completely understand it. But yeah, that's not going to work for me. But I know that there's a lot of that going on.
So there's supposed to be, I don't know if this should be announced, and I guess we don't have to, but obviously FinTwit conference in Orlando coming up. Ben might be there. Blaine, I don't know if you'll be there. I assume that there will be a significant conversation or multiple presentations around crypto. Is that something that you will try to sit through just to kind of learn more, gain more exposure to it? Or are you pretty much like, no thanks, I'm out?
No, I will definitely pay attention. I will listen to it, because you never know what's next. What's going to be and it turned out it was NFTs, and what's the next hot thing that's going to come along? Because when you've been doing this as long as I have, there's always something that comes next, and there's always something to learn from it. All that learning, whether you've been in this for 2 years or 25 years, that learning never stops. So some of the speakers there, just fantastic backgrounds. And I love to listen to people outside of what I do, because I kind of know what I'm going to be doing Monday morning. But if I can take what someone else is doing in a completely different field and translate some of that into what I'm doing, that's only going to help me. Maybe I find an edge, that I don't even know I have right now, based on what someone else is doing. So yeah, I never tune it out. That's for sure.
Yeah, that's fair. Blaine, are you still monitoring Doge? Are you in? Are you out? Are you a proud badge wearing Doge owner trader?
No, I keep it on my watch list
Nice.
I check it out every day, but I'm not in it.
Got it. And that has still kind of held up through the past few months, right? We all started this at 1 cent, 2 cent, I think, at Doge, and it, ran all the way to 50 cents or something. But I feel like it's held up throughout the entire time. So I don't know. I guess I don't watch it at all, Blaine. So I have no idea where we've been or where it's going. But I just feel like I've never heard that it went all the way back down to kind of where it had started, where to see some volume at around a 2 or 3 cent level. So anyway.
Yeah. I don't know. As you know, I like to be part of the crowd, part of the it crowd. So when Doge was running, I wanted to be in there, but it's not really doing anything. So, not for me. Ben, I wanted to go back to a question for you. So you said it took 6 years for you to become profitable. or consistently profitable. Did you have a backup against the wall moment, or like what was it that clicked for you?
I had a big trade that went my way, and that was silver. And that kind of put me on the map. And this is about between like 2004, 2006, that period. I had several big trades actually through there that allowed me. And at the time, I was also trading options. So I was able to build that bankroll a little bit faster. I had already paid my dues earlier back in 2000, so learned those lessons about protecting and managing your risk tightly and being sure that that never happened again. And then once I built the payroll up to where I was able to support, it also helped. My wife is in finance too. So I had her support at that time as well to say, hey, just, give it a shot. I always had therapy to back myself up. If it didn't go well, that was always a backup. So I ended up at that time too. I had a business outpatient center with a partner, sold the business to the partner, and that was my nest egg. That was where I was able to make that transition. And that's the toughest part. Like I said, for most traders, is to get to that point where you have enough, again, cushion, to be able to make that transition into full-time trading. And I pretty much was between 2006 and 2008 is when I made that transition to full-time trading, and have been there since.
So it sounds like it was a fairly gradual climb for you.
Oh, absolutely. Absolutely. It definitely didn't happen overnight. And going back to my original style, it wasn't a style, back then, if I made 25, 30% on a year, that was a fantastic year. That's now that wouldn't even put me in the top 50 of the investment championships. These guys are putting up 200%, 300%, 900%,
Wait,
in a year.
can you tell me about the investment championships?
Oh, you didn't know that there's a U.S. investment championship. This
Now, are
takes
you
place every
involved?
year.
Are you a
I
champion?
No, in fact, my style does not fit that. Um, I'm debating it. I've had a couple people discuss whether I want to get in January, but the style that I'm comfortable with does not really fit that. Those guys are animals. They really are returning, 900% is life changing money. That's absolutely, to think that they're returning on average 70 to 80% a month over a whole year. It's crazy to think about. So I would have to significantly step up my game, to even compete. And I'm the type that if I'm going to compete, it better be because I have a shot to win. Yeah, so when I look at those numbers, I'm just like, that doesn't really fit me. Now, having said all that, don't count me out, because I'm
Do it.
practicing. I'm
I
working
want
on
to
it.
watch.
Yes, and that would be starting this January. So
Oh my
yeah.
gosh, I got to put this on my calendar. I think you should do it. Then I can know a trading champion.
Yes, there are so many out there. Oliver Kell, Mark Minervini this year, Matt Caruso, Leif Sorade. I don't know if you know these guys, but these guys are all part of my FinTwit circle. They're all champions. The stuff that they share is unbelievable, because I can go back, I can relate to the things that we were sharing, back in 2008, 2009, when Twitter first came around, and the stuff that we were sharing on the blogs, and to see these guys that are so specialized in what they do. Leif, he only trades high tight flags. It's one pattern. And this guy, he absolutely crushes it. And he knows that pattern inside and out. And that's his specialty. And it is a joy to watch these guys work. And, at the same time, I get to pick their brain a little bit, and it's a new pattern that I can get better at. So yeah, I really, really enjoy it.
I feel like you have a groupie now in Blaine. Like if you end up doing this, you are going to have a groupie for the World Championships. Like
for sure.
When you end up placing first, second, or third, there's going to be somebody right there on that podium. It's going to be Blaine.
Fantastic. Happy to hear. It goes all year long. It starts in January and it goes all year long. They report the results every month. I think some of them they update every quarter. So it's something that you keep track of, all year long, and you kind of know where you stand in the rankings. So it also, we have a lot of that on Twitter where they'll say, well, what was your return, or what was you? There's no debating and no arguing, because these are verified results. If you're in the U.S. Investing Champion and you've been able to keep track, all year long. So yes, it's a fantastic event. I just have to decide whether I want to. It's a huge. It's taking on a monster, because the numbers these people are putting up, and these traders are just fantastic. Nothing like what I was learning from when I originally came over to FinTwit.
I'm excited.
It gets my blood boiling too. I'm a little fired up for it too. I get excited, and I am competitive like that.
Yeah, that's what sounds so great about it. I'm like, oh, competing? I like competing.
It's already competitive in nature, right? What trading really is competitive. You guys are adding another layer to it. I mean, ultimately, like day trading in a competitive arena has to be, about as competitive as it gets.
I really like the idea.
Not that this is day trading, but you know what I mean.
I really like it.
Yep.
And that's the thing is with that, it's all different approaches. It's amazing to see so many different approaches. Ultimately, what it comes down to was, what was that number on the bottom line? How much did you earn over X period of time? That's what it comes down to.
That's also, in a way, compounding losses. Because if you're not doing you're not doing well both financially and in the competition.
Yeah, that's a
we're thinking
double
with a
whammy
really
there.
Good mindset.
Yeah, you don't want to think in those terms. You want to think of what you
Yeah.
want to do is have a good month and build on it. Just keep building, building. Yeah, that's where you want your mindset to be.
That's right. So, Blaine, I'm assuming you have some questions from some folks we haven't gotten to.
From Blue Bonnie. Hi, Ben. I have reviewed some of the trading strategies on your website and blog. What is one of the low risk trading strategies that you can recommend for a newbie? And maybe we could wrap this into I love to ask the questions of like, what advice would you give to a brand new trader?
So I would have a brand new trader pick a pattern that they understand, that makes sense to them. For most, it's the cup with handle pattern or a cup pattern. That's the one that most people start with and are most familiar with. Now, within that, I have what's called a pocket pivot, and I also have what's called the power of three. Now, these are two setups that are within that cup pattern that provide an early entry opportunity, and at the same time, very, very tight risk. So if it doesn't move in your favor to the upside right away, you're out. So a pocket pivot, what that is, that's the highest volume day that we've seen over the last 10 periods. The stock closed green and high in the range, and I look for those coming up the right side of the cup. So I'm not going to take a pocket pivot if it's still in a decline. I'm not going to, pay any attention to it. So when you see that, that's your entry right there. You pocket pivot. End of the day, I've got my signal. take your entry. Now you manage that maybe with that day's low, or maybe the 21 EMA moving average, or maybe the 50-day moving average is right below. You're trying to match that up with a very tight risk area. So if that continuation doesn't happen immediately, you're out. But once you start building that cushion and you start making some gains and making some progress, that's when you can use the 10-day moving average, 21, 20 MA, 8 EMA, whatever your preference is, on the way up. When we start getting into 20% gain, that was the traditional CanSlim method. Once you have 20% gain, you start taking some profits, if not all of it. That would be a basic system that I would start with early on. That way, the key, you've got managing risk and you've got where to start taking some profits, because you want to keep that risk reward profile correct so that you're profitable. So I share those also. Pocket pivots, I share upside reversals, I share those patterns that we talk about. And this is relatively recent. I did start a newsletter so that I can share those too, and that new traders can come in. And again, going back to those people that don't have the time to scan for all these, I put those out there and share them.
I love it. That's really good advice. And then somebody on Twitter, I don't even know what this means or if it's a real question. He wrote offensive selling. Is that a thing?
Offensive selling? Yeah. Okay.
Offensive.
Defensive selling is you got stopped out. That's your defensive selling. Offensive selling is you're making progress, but where do I start taking some off the table? And the easiest way and the best way, if you're a swing trader and your risk was 3%, you want to start trimming it 9-10%. Keep that 3-to-1, risk reward ratio and balance. If you're a position trader and your stop is 7% below, you want to start taking those profits at 20% gain. So a lot of that depends on your time frame and definitely depends on your risk. If your risk profile is such that you're trading small cap, micro cap biotechs and your stop is 10-12% away because that where it makes sense in the chart, you can't take profits because you're up 5%, because that risk reward ratio it's not in alignment. You're going to end up losing money over the long term. So you need to have that proper risk reward profile. And all of that starts. Most traders, what do? They look at a stock and say, where does this have the potential to go? Oh, I can make 10%. I can make 20%. It's going up here. When it's trading at 40, I see it going to 50. So I'm going to make 25%. That's the first thought, when it should actually be the exact opposite. You should be thinking, okay, this stock is at 40. Where am I wrong? Where am I going to get out? Okay, it's 40. Right here is a 50-day moving average at 38. That's 5%. If it's below 38, I'm getting out. So if I have 5% risk, I've got to make sure that it makes sense that I can get at least 15% or more on the upside. And that's the way you really want to not only manage risk, but when we talk about offensive selling, that's where you want to start thinking about taking in profits. And if it's a good, healthy market, and the market is strong, you don't necessarily have to take 100% off because you're up 15%. Take off a third, take off a half. I do what I call leave on a runner. I'm taking half of it off, but I'm going to leave half on. Let's see how it acts tomorrow. Let me move my stop up to today's low, and I'll keep moving that up as it makes progress to the upside. So that's what they're referring to with offensive selling.
I love that, Blaine. When you first read that question, you thought somebody was offending somebody else by selling. It's all right. No. I'm not making fun of you. I just think that's funny. The first way you read it was someone's offended by something.
Sure. I mean, just hypersensitive.
That happens all the time. I type that, I took profits on something. oh, well, I still have it, and they get offended. Yeah, but that's not what they're referring to. But that does happen all the time. I see it often.
That's hysterical. Yeah.
Well, Ben, this has been delightful. And I could talk to you for another 10 hours. And also, I'm totally willing to sign up for if you want to teach me anything. I'm so impressed with your knowledge, so impressed with your ability to explain things. We're going to the championship, so it
I'm
seems
taking
like
you
we're going to
with
be
me.
together for a while.
I'm bringing you with me to the top.
Perfect. That's all I need. Trading on the computer, forget it. Just need to coattail.
Before we got on here, and actually while we have been on here, I have been looking at Ben's YouTube channel. He has been doing some YouTube videos for quite some time, and a lot recently as well. I don't know if you plan to continue that, Ben, but I certainly will be diving into those. Newsletter, saw the website with those as well, and of course, as we talked about, some of the scanners that you post, the velocity scanner, for example. I mean, there's a lot that you're putting out here, Ben, for all of us.
I do try my best. It's a lot of content sometimes, but if you know your time frame and you know who you are as a trader, you can usually read between the lines there and pick out the stuff that applies to you. And that's what I love. I love to see, and there's been so many over the last few years that have come in as complete novice traders, and start the same way you did. What's an inside day? What do I even do with that? And now they found their own way. They found their own path, and we're, sharing stories and sharing setups. And it's kind of like I compare it to a singer that they love when the crowd sings the song back to them. And that's kind of where I'm at now in my trading, is I have all these people sharing charts on Twitter, and they're throwing those charts back at me. And I'm like, yeah, you get it. That's it. That's exactly how my chart looks. So yeah, it's a great joy for me to see.
Well, your attitude is infectious. I'm in a much better mood now than I was when we got on this call. So whatever, I love
Fantastic.
it. Ben, thank you so much. I would love for you to come back anytime. I hope you will.
Absolutely. Anytime. I absolutely love sharing this stuff. And I love that you guys are a much more relaxed atmosphere too. This was fun.
Yeah, our tagline is, we ask the questions you're too embarrassed to ask. So
I love it.
All right, well, we'll see you next time. We would like to thank our producer Joel Edwards and Chesley Lowe for this awesome banjo music.